Hi, I'm Graham Leeming, CEO of Skellerup Group. Looking forward to providing you with an overview of our business today, the performance that we've achieved over the last few years, and the opportunities we have in front of us. So Skellerup, quite a broad business who sell into a wide range of applications. But in general, what we do is we design and manufacture elastomer and engineered plastic products. And our products are used in a wide range of applications, probably a lot wider than what most people would anticipate. Our products are used to join infrastructural pipe, which carries fresh water. They're used as seals as part of a cartridge in taps. They're used in the milking of cows and therefore the production of milk. They are used in roofing construction, so sealing penetrations through a roof to prevent the ingress of water into homes and businesses. They're used on people's feet, so we sell rubber footwear. A lot of people recognise the iconic Red Band name. But not only are they used by farmers, they're used by foresters, they're used by firemen throughout the world, and they're used in the electricity industry, for example, in the United States to protect linemen when they're working in environments like that. They're also used in the orthotics in your shoes and of more recent years in the performance decking on your leisure boats in New Zealand, Australia, and across the world. So a wide range of applications. So as I said at the start, the common link amongst most of the products that we manufacture is elastomers. So elastomer is a rubber, or more commonly referred to as a rubber. And the thing about elastomers is you can mechanically stress and stretch them, they'll regain their shape and they'll continue to perform. So that's the common material. And then the structure across our businesses, Skellerup is very much a collection of businesses across the world. So we have a presence in New Zealand, Australia, the UK, Italy, China, and the US. And having a presence in all those markets, we set our business up very much as business units. So we have people focused in their markets on their particular suite of applications and on their particular set of customers. So that's one of the key elements to how we, from the outside in, may look like a wide range of applications that we sell into, and that is true. But by setting up our business in that way, we're able to manage that very effectively. We focus on high conformance and high performance applications. So we endeavour to not really participate in more commoditized products. By high conformance, we mean a lot of our products must meet food safety standards or potable water standards. In fact, 40% of our revenue is generated from products that come into contact either with fresh milk or fresh water. Those standards are quite demanding in terms of what materials you can and cannot put into your products, and they change quite regularly. So that's a pretty high standard for ourselves and our competitors to meet, and also makes it pretty tough for other new entrants to come into the market and compete with us. So that's the conformance piece. The second element is performance. A lot of our products must meet very demanding performance requirements. If you think about infrastructural pipe under the ground carrying fresh water, there are instances of some pretty old infrastructure around the world that does leak, but our seals and our gaskets have a very important job to contain that fresh water in the network or contain the wastewater in the network. Similarly, our products used in the dairy industry, they're pulsating in a vacuum. They have to continue to perform. We think about roofs on properties and the need to ensure that no water penetrates into those buildings. Again, performance is critical. So conformance and performance are two essential elements of what we focus on at Skellerup. Sure, the impacts of climate change, I've touched on the sorts of applications we sell into. We sell into potable water applications and wastewater applications and roofing construction. So if you think about the impacts of climate change, there's a greater importance to secure those networks. So our products are critical to the integrity and security of those networks transporting the likes of potable and wastewater. Also, the impacts of climate change are you do get damage. So there's an increased need for repair, whether that's to buildings, whether that's to infrastructure, and the nature of the products we sell into those applications mean we're well placed to, if you like, adapt and benefit from what some of the needs are to combat climate change. And then from a broader sustainability theme, we have the emergence or the growth of solar applications and battery applications for the generation of energy. And if you think about a solar application, that's typically going on a roof. Those things have got to be sealed to make sure you don't get that water ingress. We sell products that suit the application. And then battery applications require some pretty demanding elastomer products to enable the performance of those new energy sources as well. Yeah, so we're a June year-end company. So in FY24, we reported an EBIT of 72.7 million, which was our 8th successive record EBIT result, and an underlying net profit after tax of just over 50 million. And over the last 7 years, the achievement of those results has been pretty broad-based. We organise ourselves into two divisions. We have the Agri division and the Industrial division. Roughly a third of our revenue comes from the products in the Agri division, and 2/3 from the Industrial division. The Industrial division has grown more rapidly than Agri over the past 7 years. In part, that was because the performance wasn't as good. But I think some of the key things that have driven that improvement in performance is, firstly, when we brought in new products into all of our business, we brought that in at better margins than some of the existing products. We've had a better appreciation of the value we are creating for our customers, and we're capturing a fairer share of that pie. Secondly, I think we have a better appreciation again of the value we create with some of our existing products. So we've improved our value capture in the market for our existing products. Thirdly, you can always do better in your operations. You can find improvements, ways to reduce costs and do things better. And sometimes that also requires investment and new equipment and new technology, investment in people. And I think we've done those things well as well. So collectively, that focus on delivering new products well, delivering existing products well, and continually improving our processes has delivered the improvement of performance that we've had over the past 7 years. And under both of those metrics, EBIT and NPAT, we've achieved the compound annual growth rate of 12%. Yeah, I'm pretty excited about the future. At the start, I mentioned the capability we have in our business and the ambition we have in our business. Something we often talk about with Skellerup is we have a deep technical expertise, and we organise ourselves, as I said before, into business units, but then we support that with a series of development centres. So we have deep technical expertise in these development centres. We also have deep technical expertise with our people who are out in the market interfacing with customers. And we have some real expertise in our manufacturing processes and our facilities, which are quite scalable. We manufacture products in a number of different countries throughout the world. And then we have a presence, as I said at the start, in all of the markets that we're selling products. To try and be a New Zealand-based exporter, selling products to the rest of the world without a presence there is not ultimately going to be successful. So 80% of our revenue is earned overseas, and we have our largest market in North America. So we have a capability to continue to grow the business. We have a willingness to invest in both people and equipment to do so. And by virtue of the presence that we already have, we can scale up, and I think this is going to be important for growth going forward. We can scale up our manufacturing capability in those markets to ensure that we continue to deliver what our customers need and overcome any hurdles that may come our way by way of tariffs and such. Yeah, I think I close with what I started with. We have a track record of delivering very good performance over the past 7 years, and that's something that we are confident we can repeat and deliver further earnings growth over the next 7 years. And we'll do that through the people that we have, their capability, their ambition, the customer relationships that we have. A lot of our customers have been customers of Skellerup for decades. So you build up that trust and it enables you to continue to win business from these customers and support them with their growth, and also create opportunities with new customers because of the reputation that we've gained. So excited about the future, excited about the team of people that we have, excited about our capability to invest in the opportunities that we have. And ultimately that will be good for customers. It'll be good for our people because of the opportunity it creates for them. And it'll be good for shareholders because we'll continue to generate good, strong returns for shareholders.
Good morning, and thank you for the opportunity to celebrate our 10th year anniversary of the listing on the NZX. My name is Nick Paul. I'm chair of the Enprise Group.
And I'm Ronnie Baskind. I'm Managing Director of the Enprise Group and CEO of Kilimanjaro Consulting, which is one of the entities in the group.
So I thought we'd tell you a little bit about the group and how we're composed. We've been in existence for, as I said, 10 years on the stock exchange, but prior to that, our listing was with Enprise. Business was Enprise, which was primarily focused around implementing ERP systems for MYOB. And we've grown quite substantially over the last 10, 15 years or so. We now have, I think, 6 companies in our group, including Kilimanjaro, as Ronnie mentioned, is our main contributor of revenue. But we've also diversified into other SaaS-based businesses that allow us to kind of get the synergies of working together in the same market. And that includes Datagate, which is a telco-based billing engine that is selling internationally into the US, the UK, and Europe, and New Zealand, Australia. And they've been going for about 7 years now and going exceptionally well in that market. The CEO is now based up in Vancouver and is growing that substantially up in that market. We've also got a business called iSell, of which we've got a controlling stake in that business. That's a business that does what we call configure, price, quote software into the similar market to the Datagate, which is the MSP market. They're focused on primarily in New Zealand and Australia, but are starting to expand into other markets as well. We also have a small holding in an organization called Vodacom, which provides unified communications and VoIP as a VoIP developer, primarily in the New Zealand market, that has opportunities to go elsewhere into international markets. And then you want to add to that, Ronnie? I've probably
probably add and maybe a little bit of the history, because from a Kilimanjaro point of view, Kilimanjaro, as Nick said, is the largest entity in the group, major contributor of the revenue. So we started the company in Australia in 2006 with a view that because MYOB had acquired Solution 6, they actually got into this enterprise software space. And it was a space that appealed to us. And we started building a business. Kilimanjaro was formed in 2006. But what changed was in about 2013, 2014, MYB started talking to us about SaaS, which was a relatively new concept then, software as a service. They were looking to acquire, or at least acquire the rights to some software as a service that they would distribute in Australia, and asked us if we would be interested. Actually, Australia and New Zealand, it turned out afterwards. I knew that it would cost a lot of money to retool or to tool up for another piece of software. And I'd been talking to Mark Lovies at the time. Mark Lovies was the managing director of Enprise Solutions in Australia. We bumped into each other at MYB functions and started chatting. And we thought, if MYB does go ahead with this new SaaS software, we were better off doing something together rather than individually. And that was sort of the start of how Kilimanjaro and Enprise Solutions came together. We sort of got engaged before we got married, and we had a period of time where Enprise owned a minority stake in Kilimanjaro. And then at some point, we folded the Kilimanjaro equity into the group. And the difference that made was that because you were part of a public company, you could raise capital. And I think this is something that, for me as an individual entrepreneur, was always the constraint to growth. So having capital available enabled us to grow. We grew then, having in the combined Enprise Solutions and Kilimanjaro, we rebranded so that we operate at the Kilimanjaro level as one company, one team, one brand across Australia and New Zealand. We've got, I think, 11 offices. We've got 120 people. And it's a really good story. We're MYOB's number one partner. We were their number one in terms of size, also their partner of the year in terms of a number of metrics, customer satisfaction, marketing, etc., etc. And we've become quite predominant in those markets. I think just looking back historically, we did go through, the Enprise group went through a difficult phase, a couple of years ago. And probably the biggest change is that the business is pivoting from on-premise software, being the old Exonet or MYB Exonet software, to the new Acumatica software. It's been rebranded as Acumatica, fastest growing SaaS software in the world in the ERP space, supported by Acumatica out of the States. And that's a very, very rapidly growing part of our business. And as the revenue sources shift from a once-a-year annual license fee to a monthly subscription, the whole pattern of how the business runs and profitability starts changing. And that's now starting to be reflected in the results. It's been a long process, probably about 2 years to get to this point, but the future's really, really bright.
Yeah, I think it's worth mentioning that we did have some challenging times a couple of years ago. But to Ronnie's point, our shift in momentum from on-premise revenue to SaaS-based recurring revenue has happened at pace, and particularly in the last 18 months.
Yeah.
I think what that provides us with is some momentum and trajectory coming out of the last half of the last financial year.
Yes.
And that's been reflected in our numbers, and also recent share price revival that's been quite encouraging to see.
Yeah.
And what's more, we believe that trajectory is sustainable as we kind of build momentum into that market. This is quite exciting to see.
It is. And I think, when we talk about the shift from on-premise to SaaS, it also impacted on one of the other entities, iCell or IT Quota. It was an on-premise piece of software, knew that they had to move to the cloud, probably underestimated how much effort and how much time was involved.
Yeah.
So some of the losses over the last few years have been investment into iCell to get that change happening.
And worth touching on that. I mean, I think our announcement recently and what we posted is that we did want to focus on iCell and help that business stabilize its software. It's a very sophisticated piece of software, and it as we've moved from a cloud-based solution to SaaS-based, the transition's taken slightly longer than perhaps we anticipated. Be fair to say.
Yes.
But what we've done in the last 12 months is really stabilized that to where it is now at a point where it's our customers are receiving a very stable product, and it's allowing us to grow that business now quite well.
Yeah. I think the one entity that we didn't mention was recipe marketing.
Good point.
So I think having gone through the transition from on-premise to SaaS, we felt that we did need to diversify our revenue sources a little bit in Kilimanjaro. We came across a complementary product called HubSpot, which we use internally, and it's very well known. It's growing at an enormous rate. We acquired a small HubSpot implementation company in Auckland. This was only 3-4 months ago. And there are enormous synergies that we're uncovering. The number of our clients that are using HubSpot already, the number of our clients that want to use HubSpot, the number of HubSpot clients that want to use Acumatica is enormous. And we see enormous growth coming from that as well as just our traditional sources of business, which is the mid-market in Australia and New Zealand.
So one point that Ronnie is stressed on the board frequently, he's very close to MYOB, and the Acumatica product is widely regarded in world markets, in that mid-sized market, as the ERP of choice. The MYOB business has a multi-decade agreement with Acumatica to provide that to market that service in the Australasian market. And Kilimanjaro, as the largest partner of MYOB, positions us extremely well to take advantage of where the Acumatica growth is going.
Absolutely. And MYOB themselves are the largest partner of Acumatica worldwide. So that gives us quite a nice little meme to say the largest partner of the largest partner. But absolutely.
Yeah. And the other point I wanted to touch on that Ronnie mentioned is the addition of Recipe to our stable is interesting, in as much as it adds another layer of productivity tools that we apply into the same market.
Yes.
And
yes.
You've done a great job, I think, of building up those tools over the years. to which we now have a stable of, must be 20 or 30 business
products.
provide.
Yeah, a lot more than that.
A lot,
probably
right.
pushing 150.
Okay, right,
Yeah,
excellent.
But that's exactly correct. That we, in the Kilimanjaro business, sort of as opposed to the group business, but in the Kilimanjaro business, the aim was to improve efficiencies in businesses through the clever use of innovative technology. And we've built a portfolio of what we call connected services that we provide to our existing clients. So it's not sort of just sell to your client and move on. It's about the lifetime value of the client. We've just ticked over 300 advanced sites, which makes us the largest partner in AUNZ, which is a great number. With EXO, we, by the way, got to just over 1,000 clients. So in total, there's a big client base that we can now take advantage of and sell other services into them, loyal customers, lifetime value, etc., etc. We are a people business, and as you know, the retention of people is really important. At the group level, we've retained people for longer than I've been around. At the Kilimanjaro level, we have something which we call the Festival of Years, where we celebrate people when they get to their 5th anniversary, their 10th anniversary, their 15th anniversary, and their 20th anniversary. And there are a number of people that have been there for 20 years. So we do tend to keep our people because we look after the company culture. It's very much what I call a tribal culture. Everybody looks after everybody else. So while we are quite hard-nosed in terms of the numbers and the productivity, at the same time, we're giving equal balance to the soft side of the business and the culture of the business, and making sure that people want to work there. They've got stability, they've got longevity, salaries are market-related, and so on. So people, the acquisition of people or the attraction of people is one of our strengths, and we do tend to attract really high-quality people in all of our departments.
I can maybe add to that, and sitting around the board table in recent years has been an interesting conversation with Ronnie as he's been defending pay, increasing pay, increasing salaries across the board to our staff. As you can imagine, that is contentious in the context of what the outcomes are for the business, and it needs to be balanced. I guess Ronnie's been an advocate of that to the point where it's now become a strength of ours, as he mentioned. The staff we have, particularly in Kilimanjaro, are highly skilled and highly sought after because of that skill by other implementers in the industry. And we've done an exceptional job of retaining those people. And the staff surveys we do regularly, are always positive. But at the end of the day, the number is always how many people you retain.
Yeah.
And we have an exceptional track record on that. And Ronnie's done a brilliant job with his team to make sure that's the strength of the business.
Yeah, I think for me, the exciting part, again, looking at it from a Kilimanjaro perspective, is that as the economy starts shifting out of sort of recessionary conditions and people start getting more positive about the future, interest rates coming down, inflation coming down, people start spending money in their businesses. And I've got this theory that we generally know before the newspapers know when things are changing, because we look at our sales pipelines, the number of leads we generate, the number of deals we've got in the pipelines, and these are at an all-time high for us. So we're very excited about next year. All that it will take is a little bit of a change in the economic climate, a little bit of business confidence, and I think we will go into an era where we are doing much better than we've done in the past.
Just to add to that, I think I'm most excited about the growth opportunities we have in all aspects of the group. The work that Datagate and ISAL have done in positioning themselves for growth is significant, and we're looking forward to riding that journey with them. But indeed, with Kilimanjaro, I think what we've created is a really strong platform to take it to the next level. We've proven that we're resilient in spades, and I think we've earned the right to go to the next level on the basis of our delivery. So we're excited about that. And, yeah.